These are the top 3 retail stocks under accumulation for the month of February. So here's what's great about data. We can see what is leading, what is lagging, and right now discretionary is the top ranked group in our data. That means a lot of retailers are starting to get accumulated again. They were some of the weakest performing stocks last year. That is not the case now. Now let's look at the big money flows in the discretionary sector. As you can see, there have been a lot of buying, very little selling this year. And as of Monday, January 23rd, there were 24 stocks that were under heavy accumulation. As a reminder, MAPsignals is all about data and following the big money. If you like this type of unique content, like and subscribe to our YouTube channel. It helps us out. Let's get to some stocks now. So the number one discretionary retail stock that I'm looking at, and that is Crocs. Ticker is CROX. You know, the rubber shoe maker. It's got a big high score, MAP score of 84.5. Stock trades right around 125 bucks. But why is it one of the top ranked stocks right now? It's because look at all of the big money going into the shares over the past 6 months. Now, these green bars are telling us that the stock is rising in price as volumes are accelerating. Usually that can mean an institution is getting involved in the stock. We can see that over here, we are going to be changing the colors, by the way. This is telling you that Crocs was one of the top 20 ranked stocks in our data a couple of times recently. So let's look under the hood. The fundamentals look really strong. 1-year sales growth, 66%. 1-year EPS growth estimate, it's positive 3.8%. You look over here at the technicals, it's got a lot of solid action. It's up 16% year to date. Might be a little extended, but it does have a lot of demand. All right, we're gonna stick with the footwear theme. The number 2 retail stock is Skechers. The ticker is SKX. Full disclosure, I own that in personal accounts for a long time. Look, it's got a MAP score of 84.5. And this is one of those footwear companies, I'm sure you all are aware of it. Kids love these shoes. But let's look at the data. We can see that a lot of big money has been going into the shares, right? This has been a theme for a lot of footwear companies. Back in September, it was definitely for sale, just like a lot of stocks were. The markets were oversold. But this is one of the areas that continue to thrive right now. We can look here at the fundamentals. The 3-year sales growth is healthy at 12%. The 3-year EPS growth rate is 197%. The forward PE, just over 21. So it is a little more expensive than the market, but technicals are very strong. The last buy signal was January 23rd, and it trades near its 52-week high. So it's getting very strong scores there. Last but not least for this video, we are going to be looking at home builders. That's right, DR Horton, ticker is DHI. Stock price is right around $95. It's got a MAP score of 86. Now listen, people have been worried about the home building space, right? They're worried about the consumer. They're worried about higher interest rates, but this is one area of the market that continues to thrive. And you'll see what I mean. This is a 6-month chart. You can see plenty of big accumulation signals going into the shares. They just had really good earnings, beat the street estimates. You can see it was a top ranked stock recently as well. But let's go and look under the hood. You always want to do that. 1-year sales growth is 20%. The 1-year EPS growth estimate is subdued at just about 3%. Profit margin, 17.5. So it's getting decent scores. On the fundamentals, 10 times forward earnings is the estimate. And then again, it's going to get very strong scores on the technical basis because it is above its 50, 100, and 200-day moving average. So there you have it. These are 3 of the highest ranking stocks in our data. Remember, none of this is personalized advice of any kind. You got to do your own research. Some of these stocks are extended. Wait for a pullback if you're looking at a potential entry. But again, always do your homework and remember to respect the flow of money, right? Volumes can help you uncover some of those insights. Remember, MAPsignals wants to help you become a better investor. Follow along with our journey. Like, subscribe to our YouTube channel, and don't forget to check out MAPsignals.com and follow our big money insights. I'll see you guys next time.